Good evening, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is July 24th, 2012. Lots to talk about, so let's get started. Here we have a chart of the SPY, which is the ETF that tracks the S&P 500. All right, let's get started. In the previous videos, I mentioned that, the determination of whether I'll be bearish or bullish will be dependent on if we get a close below or above this candle here. Essentially what we've done today was we've actually bled out and then we made a recovery. Okay, so we opened here, we bled out, and then we recovered halfway here. Okay, this is the 10-minute chart of the SPY. That's the beginning of the day, and this is the end of the day. This is the bottom trend line that we saw on the daily chart. So again, we opened up here and we just bled out towards the end of the day, and then we caught a bid right at this 133.99. Again, these mathematically calculated formulas seem to be working out pretty good. We close on this candle at 133.99. That is exactly what this level is here, 133.99. Okay, as interesting as today's action was, you have to remember that we did not close below yesterday's candle. All right, however, volume was substantially higher. Today's volume was at 173 million. Substantially meaning, because our average is about 150, and we're definitely above average for today. However, this candle was created after the move has already been made. Okay, so what direction do I think we're gonna start going? Well, we all know that majority, more midterm, I am still bearish. I mean, there's nothing telling me right now to be in a bullish manner, or there's nothing telling me that we've reversed the trend, which is currently down. Okay, now in yesterday's video I did create this this bottom trend line like this, and even if I did create this trend line like this, guess what, we still close below this trend line here. Okay, so couple of things. If we can get a close below this candle here, all right, or even better, if we get a close below this candle here, then I think that this is the start of the leg down, which is what I've expected. Hopefully I'm saying this right. Maybe about 5 videos ago I said I'm thinking this would be the last leg up, and then we should be breaking down there. I wasn't entirely sure. I'm gonna be honest with you guys. I was kind of like in the middle. I did mention that I thought this would be the leg down, but because we didn't hit this upper trend line here, there is a possibility that we may bounce up, and that possibility is always going to be there because in the stock markets, obviously nothing is 100% guarantee. However, markets are looking a bit weak. We did get a lot of volume on this move here. Unfortunately, it was already on a move down. Basically, what I'm trying to say is if this candle was somewhat of a hammer or a doji candle and we had volume like this, then I think that we have a potential of going higher. I mean, it would make sense. Just because this candle isn't a reversal pattern candle, just because of the volume alone, this could definitely get a a little pop tomorrow. Okay, but that's not telling me that we are, and I'll tell you why. This here is a chart of the UUP, which is the US dollar. All right, so we draw a line across. Again, just a bit of some history for new viewers. We got a breakout here. We didn't confirm, so we broke down. We went right into this 2280 mathematically calculated level. We went up again, but we were unable to close above. Okay, unable to close above this line here, which is right now a very critical line. So I don't know if I mentioned this in yesterday's video, but if we get a close above this candle here, I think I did, then that should validate the move up to the $85 level, not on this chart, but on the DX chart, which I'll show you in a few seconds. We were unable to close above this candle here, which means I'm still somewhat neutral just from looking at the SPY and the UUP chart. Okay, but I'm not done with the analysis yet. Okay, so let's move over to the DX. This is the chart of the dollar futures, all right, and this is the 85.23 level. Okay, and then in yesterday's video, we obviously talked about what I thought about the DX, right? We had a breakout of this double top here. We didn't confirm, so we broke down. We talked about having support here, and then we broke up. And then now, did we confirm? Yes, we did. We closed above this candle here. The candle high here was 84.14. The close of this candle here was 84.16, so we closed 2 cents above. I really wouldn't say that this is like a confirmed closed above, simply because it's so close. I like to see something a little bit more major, but you know, technically speaking, we did confirm because we closed above this candle here. We are getting somewhat of a pullback now. This is the after hour candle here, so keep in mind that the dollar is inverse to the markets. But again, my analysis isn't complete. So right now, just from looking at the SPY and the dollar charts, there is a possibility that we may get a bounce tomorrow. Okay. Switching back to the SPY, and this is the weekly chart. All right. So giving it a little bit of a better understanding when you look at the weekly chart, of course, it's longer term. We have this down move and then we have this up move bearish flag. What happened today, or what's happening, which is only Tuesday, and these are the weekly charts, so each candle is a week, right? So it's not until the end of day Friday will we actually have this candle created. But if this candle holds, meaning if it actually breaks down from these mathematically calculated levels here, I'm thinking that our next target will be at this double bottom. This 50 moving average will have some support, but I don't think it's going to be very much. Again, we are in a downtrend, so I'm going to assume that the pressure is going to be there. It looks like that we may already start. How should I say it? The start of the breakdown may be already happening. Even though we get a small bounce tomorrow, if we get a small bounce tomorrow, you know, you're going to have bounces here and there. Again, this is the weekly chart, but majority, meaning midterm, not long term because I'm not an investor, but midterm, I still think we're in a bearish market. Okay, I know not a lot of analysts out there are thinking otherwise, but this is just my analysis. This is what I'm thinking, and so far so good. I mean, so far everything's coming into play. The plan is coming together, and you know, everything looks good so far. All right, this is the Apple chart. This is the leader of the tech industry, I should say, the leader of the SPY as well. It's the big time player, and Apple is pretty much, when you see a spike in Apple, you can pretty much see a spike in the SPY as well, and vice versa. Okay, so long term, let's check the weekly here. We have this down move and we have this bearish consolidation, but we're still in this bear flag, unlike the SPY. Switch back to the daily. We still have this 612.34 level that's been holding up pretty well. We have not broken down from this trend line here, so this has not validated any type of move to the downside just yet. Okay. However, like I said in the previous video, guess what? Apple has earnings after the market closes today. All right, here's something cool, maybe not so cool, but here's what happened. Normally, Apple always beats expectations. Normally, Apple always blows away expectations, and normally we will see a spike anywhere from $30 to $60 in the aftermarket after earnings reports from Apple. Okay, so I'm a bit tongue twisted today for some reason. Let's take a look at the Apple chart after hours. In fact, let's look at the 10-minute chart here. Let's bring in the after hours. Bam! Did not meet expectations. Where did Apple go? Okay, let me go back to the daily. You see these two mathematically calculated levels here? Okay, I've had this here since this day. Okay, so you know, I'm not making this up. These lines have been in here. If you look at the previous videos, I normally always do an analysis on Apple because it is a leader in the tech sector. This is where it went intraday after hours. Bam! Right into this 565.57 level. Right there, and then we got a bounce. These levels, although I say they don't work during earnings, and I still don't play earnings, and this is one of the reasons why I don't play earnings unless you have the inside scoops or you know you're inside trader. I don't play earnings because you just don't know what's going to happen. But these mathematically calculated levels, although normally doesn't work for earnings, looks like it's working right now. Keep in mind, however, on the 10-minute chart, Apple has a down move and now it's bearishly consolidating, giving it a possibility to break down from this level here. So if you were trading the after hour market, you could have actually went long after it hit this level here and it made substantial profit and then take a kind of like a day trade during the after hours. On the 10-minute on the daily chart, what we basically have is we're going to open right at this level here, which could potentially give us a bounce. How do I validate that? Because I don't really like the 10-minute chart. Let's look at the hourly chart. This is the hourly chart of Apple. Again, down move, bearish consolidation. So it's kind of still discrepant, but I will say this. The markets are definitely a lot more bearish than it is bullish. And I will say this, unless we get absolute good news out of Europe or Ben Bernanke speaking of QE3 or whatever the case may be, unless we get something like that, then we're done. I think, in my opinion, the markets has started its downturn. We're going to get bounces here and there, but the downtrend will continue, and I think it's going to continue much stronger than we did before. Okay, but I wouldn't jump in just yet. I want to see what Apple does tomorrow before determining what the market's going to do. Basically, Apple is the strongest stock in S&P 500. So if Apple is tanking like it is now, down $33.12 after hours, that's going to tell me that tomorrow there's going to be a lot of pressure on the SPY, a lot of pressure on the S&P 500. And unless all the other 499 stocks in the S&P 500 catches a bid, okay, Apple is going to bring everything down with it. If everybody, 499 stocks, maybe 75-80% still sells off and continues the downside tomorrow, Apple is going to put even more pressure on that. We should see absolutely, definitely more downside in the SPY. So yes, I'm going to have to be more bearish and bullish simply because the trend is down. Okay, that's one. Two, Apple has sold off. It's not substantial. It's only 5.5%. So it's not a big deal. I want to see a 10% drop or 11 or 12% drop to really say, oh, it's going to bleed out. Not a big deal. Apple is still a strong stock. Don't get me wrong. Apple can easily recover after this drop. We could open tomorrow, and this level here could hold up, and then Apple could just spike right back up into this bottom trend line before bouncing back down. Okay, we always get a back test after the fact. You see that? The line that I just drew was this line here. We're going to open here. We may come back to test this bottom trend line here before coming back down, and that's if we do that. Now, a lot of times, institutions will try to save the market by saving Apple. Okay, so just remember that. The volume has significantly picked up on the SPY, which means if we can continue this higher up volume, meaning say we get 200,000 shares traded tomorrow, I think that the SPY will be done. I think the SPY will continue its downside, and if you're short, then your shorts should profit for you, in my opinion. Okay. Again, what we need to see is a close below yesterday's candle here. Okay, this is today. We need to see a close below this candle here, preferably we get a close below today's candle. Okay, we get a close below today's candle, then this double bottom support line here will just probably give us a small bounce back into these two mathematically calculated levels that used to be support and will now be resistance if we can close below this candle here, and then probably continue back down, maybe into the 200 moving average, in which case we'll probably get another bounce here and there. So we're going to get small bounces here and there. Then we're going to have another small bounce here at this support line here. And when I say small bounce, this could be for a one-day swing trade or intraday trades, meaning day trades. I don't think this gap window is going to hold much water. This gap fill though might actually hold up for maybe a one-day swing trade or whatnot. And then of course we're going to have ultimately this very strong support level, which is the double bottom. What we really need to concentrate on is the US dollar, however, because the US dollar still comes into play when it comes to the markets in general. Dollar up, markets down, something you have to keep an eye on. Look at the intraday, look at the hourly on the dollar before you make a decision, in my opinion, whether or not the markets are going to break down or break up. Tomorrow morning, if Apple holds that downturn, that $33 after hour sell-off, if it holds that and continues down and continues sideways tomorrow, creating that bearish pattern for another move down, then I'm thinking the markets are going to do exactly what I just said now. Okay, again, there is that slight possibility, however, just like a chess player, we have to be aware, we have to have stops in place, and we need to be cautious in this manipulated market. This does have higher volume. If it had lower volume like these 2 days, then I'd be much more happier, but higher volume means exhaustion, meaning the sell-off may be already exhausted. Apple may add to it, but I don't think it's going to be long-lived, to be honest, because Apple is still a strong stock. We may still sell off. At most, I think we'll hit the 200 moving average and probably get a bounce after that if we can cut through all the other minor supports within a single day. Again, volume is increasing, so there is that possibility. So you just want to, or in my opinion, what I'm going to do is just be cautious about shorting the market now. I already have my shorts in play. I already are in. I'm already profiting off these shorts. Apple should give more pressure on my shorts, which should, do good for me. And if you guys are short the market right now, then you guys should obviously be in the money. I would recommend that you put it in the money stop. Or if you're not in the money, at least put a break-even stop to protect yourself in case we do get a bounce tomorrow. But the charts are telling me right now that there is a slight possibility we get a bounce, but the continuation to the downside is more probable only because of Apple's after-hour earnings looks pretty bad. It's only down 5%, but for Apple to be at $600 and is now at 567, plus two, Apple would I had those two mathematically calculated lines, and we all know from the previous videos that we've all been watching, these calculations, although not 100% guarantee, never will be, have been working out pretty well lately. Okay, I mean, and it's not to the penny. Today it was to the penny, but it's not always to the penny. So if you're a new user watching these videos and you want to know about these mathematically calculated levels, I'll tell you something right now. It doesn't work all the time. It's not exact. It's not perfect, but it's been working out pretty well lately, and hopefully it continues to work out well, so we can all make money together. In any case, I'm not making a recommendation to buy or sell anything. This is just my opinion. I think we have continued downside, but I think it's not going to last for very long. We could, however, have like somewhat of a flash crash. There's no such thing as a flash crash anymore because we have circuit breakers that they put inside the stock market to prevent short selling, or to prevent a crash, I should say. But history shows that crashes happen after the move has already taken place, meaning a down move like this has already taken place. A crash could definitely happen after that. Crashes don't normally happen at the tops, or at the tops or tips of markets. Like when you have a top here, you normally don't see a crash happen from there. You normally see a bleed off first, like we have now, and then a substantial continuation to the downside. And Apple could definitely do that for everybody, definitely because it's the biggest stock in the tech sector. Now, the caveat is simply if the institutions continue to dump money into Apple to raise the price and manipulate Apple at the same time, which will be manipulating the SPY, then that's a different story, and that's why you just gotta have your stops in place. If you're already short, if you're not short right now, I wouldn't go short, and that's just my opinion, simply because the move has already been made. Okay, if the move has already been made, you look for a bearish pattern before you go short again, and that'll prevent you from running into any type of bear traps or bull traps. Right now, we do have a potential of going higher. So if you were to short and we get a bounce and we start rallying up, maybe not closing above here, making another high, you're just gonna have to sit and wait, and you might get a margin call because you're short, and then you'll be too much out of the money, and then you get margin called, and then you just gotta take the loss. But let's just say we continue down, right, and then we get a bounce off this 200 moving average, then I would definitely look into shorting this period around here, right? That makes more sense because that tells you that you'll probably catch the bounce, right? And if it bounces again, again, I'll probably short here. I'll try not to. My rules are I'll never chase once the move has already been made. Then I wait for pattern. I wait for a bearish consolidation, or a bear flag, or some sort of bearish signal saying that the move is going to continue. But once the move has already been made, I normally stay out of the market, or stay out of that trade for that specific stock, and I look for maybe another stock that hasn't made its move yet, and then maybe short that one instead. So obviously this is just my opinion, and you know what, I hope you guys make a lot of money in the stock markets. Take the money away from the big time traders, the ones who manipulate the markets and steal money from everybody's 401k. No, I'm just kidding. I mean, yeah, we can all be Robin Hoods, but again, I can only tell you what I see in the charts, and this is right now what I'm seeing in the charts. We still have to be cautious because we could still get a small bounce tomorrow because we did get a little bit higher volume, but then on the other side of the coin, Apple did sell off at 5% down. It is the biggest player in the S&P 500, so Apple would definitely put some pressure on the S&P 500. And on the third side of the coin, on a three-sided coin, there's a possibility that the institutions, knowing that Apple missed their earnings, may buy into the Apple stock, raising Apple, knowing that if they bid up Apple, then obviously the SPY will also bid up, and markets will still hang in there. And the biggest thing the Feds don't want is a crash. And once people start panicking, and fear is the biggest emotion out of greed, fear and hope. Fear is the strongest. So once fear sets in, then boom, everybody's selling off, and no institution is going to be able to stop it because nobody will have enough money if all retail traders are trying to get rid of their stock. Okay, so anyways, thank you very much for watching this video. I just want to mention, I know that the analysis title is 7 minutes market analysis, and obviously when I first started making these videos I thought I could do it in 7 minutes, but there's so much to talk about and I don't want to miss any details. Sometimes I still miss details in my video, and I just want to explain to you guys the best to my knowledge of what I'm thinking, and that way there's no, there's little less interpretation mistakes where if you think I said this but then I actually meant that, that kind of thing. So yeah, these, the title is going to stay the same, but obviously my videos are have been way longer. In any case, I really appreciate you guys stopping by and watching these videos. I hope it's helping you, but anyways, good luck to you, and I hope to see you in the next video.